The Fed and the Eurozone battle inflation while Bitcoin hits its lowest point since the end of 2020. However, it's not all bad news in the crypto field.
We'll discuss the latest developments here on Mundo Crypto's newscast. Let's kick off.
With these statements, the president of the Fed, Jerome Powell, reported a historic interest rate hike not seen since 1994. This 75 basis point rise has been set into motion to combat the unexpected inflation in the United States. Take a look.
Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
The 8.6% US inflation hit on June 10th set a new milestone that has not been seen in over 40 years. Despite the fear that this sparked, the cryptocurrency market did not take a hit as it discounted this event over the past few days. Bitcoin continued to sit around $21,000 zone, which as a matter of fact is a slight move to the upside. The following days, the price dropped until reaching $17,588, a level unseen since December 2020. Following this movement, it bounced back and placed itself in the $21,000 zone.
But this fear has also reached the Eurozone. Inflation has skyrocketed in the European continent, setting a record figure of 8.1% due to, among other things, the war in Ukraine and the rise in product prices. Faced with this alarming data, the President of the European Central Bank, Christine Lagarde, has already confirmed that interest rates will be raised in the July meeting and that she is temporarily halting the purchase of debt.
All of this information is available on our YouTube channel, so be sure to subscribe and hit the notification bell.
A name that's been making headlines almost regularly is Celsius Network, but the reasons are not quite positive. Let's rewind. Last week, the market's downturn led the crypto lender to halt all withdrawals, exchanges and transfers and even liquidate part of its reserves to clean up the bloodbath created. Things were evidently going downhill as competitors decided to lend a helping hand. Nexo, for instance, another crypto lending firm, offered to acquire Celsius qualifying assets. As expected, Celsius refused to accept Nexo's help.
That's right. While Celsius rejected the offer, the company did seek other ways of turning this situation around. For instance, law firm Akin Gump Strauss was hired for advice regarding legal issues that could arise from this situation. Additionally, Celsius turned to traditional banking platforms such as the well-known Citigroup Bank for financial guidance.
However, all eyes remain on Celsius. In fact, according to Reuters, securities regulators in 5 American states are investigating the crypto lending platform following its decision to suspend customer activities. It looks like Celsius will have to pull up its socks in order to save itself from this situation.
And while Celsius tries to salvage its business, fingers are also being pointed at 2 other well-known brands in the crypto space. One is Three Arrows Capital. The mammoth investment fund has had to sell off $40 million worth of Ethereum to pay off loans. In addition, concerns have been sparked regarding a possible margin call in the AAVE and Compound lending protocols.
The other company that has also been in the news for the same reason is none other than Microstrategy. In this case, due to a loan requested from Silvergate Bank by a subsidiary, Microstrategy. Despite the problems that the fall in the price of Bitcoin can cause, its CEO, Michael Saylor, was quick to highlight on his social media platforms that its company's strategy made it very difficult to receive a margin call due to the amount of Bitcoin available to amplify its collateral.
Stablecoins are also having a credibility crisis. The fall of USD has cast doubt on all stablecoins that have some similarity to Terra, as is the case with USDD. The Tron stablecoin lost part of the $1-to-$1 parity, which set off alarm bells throughout the entire community.
After reaching $0.97, Tron did not hesitate for a single second to act. Founder Justin Sun clarified via social media that its company reserves would inject $2 billion to alleviate the fall. Due to short trading positions with TRX, however, the effect only lasted for 24 hours, prompting Tron to add a further 700 million USDC to reserves to secure USDD parity, bringing its collateral ratio back to 300%.
Despite the mistrust that is currently washing through the entire community, a new project is determined to see the light of the day. We're talking about EUROCoin, the first stablecoin backed 100% by the euro, created by Circle, the internet payment infrastructure behind the world-renowned USDC stablecoin.
Initially, this stablecoin will be released as an ERC20 token, meaning that as of June 30th, it can only be used on the Ethereum network. If all goes well, however, it is expected to expand on various blockchains. It deserves to be 100% fiat money, so its model will be different from that of other stable currencies such as USDT, since Tether is backed by other cryptocurrencies in addition to physical money.
Now let's move on to one of the most well-known personalities in the world. Of course, we're talking about Elon Musk, and he has been sued along with his companies Tesla and SpaceX for an alleged pyramid scheme with the meme cryptocurrency Dogecoin.
The South African businessman is accused of promoting Doge to raise its price and then drop it. The lawsuit filed in federal courts in Manhattan states that Musk was aware since 2019 of the null value that Dogecoin possessed, and that despite this, it decided to promote it for his own benefit. This practice is not new, but it usually occurs in the new or little known tokens, and not with one of the assets with the highest market capitalization.
Now, in terms of adoption, another country has kicked off a study around the use of Bitcoin as legal tender. Federal Deputy Paolo Martins presented a legislative proposal before the National Congress of the South American country in order to establish this cryptocurrency as legal tender.
Quite right, this is yet another crypto adoption proposal in Brazil. At the end of last May, the largest exchange in Brazil, Mercado Bitcoin, and Stellar Development Foundation partnered in order to develop a CBDC, or a central bank digital currency. Despite this, the new movement within the country's regulatory body may suggest that the balance is tipping towards Bitcoin.
Now, fake news is becoming more and more of a problem as Changpeng Zhao attempts to brush off erroneous information. The CEO of Binance faced accusations of having bought over 100,000 bitcoins and deposited them into one of the exchange's cold wallets. According to the businessman, this movement only reflects the increase in deposits by users.
In addition to this, Binance has also starred in positive news. Various cryptocurrency platforms such as Coinbase and Crypto.com have been forced to fire part of their staff, while Binance has put out 2,000 new job offers. Changpeng Zhao has also used his Twitter account to send out a message to competitors and the crypto communities, stating it was not easy saying no to Super Bowl ads, stadium naming rights, and large sponsor deals a few months ago, but we did. Today, we are hiring 2,000 open positions for Binance.
That's right. Well, despite Changpeng Zhao's attack, another exchange has followed suit. Kraken is another cryptocurrency exchange that has posted 500 jobs. Its intention is to recruit new employees throughout the year who have lost jobs as a result of this situation. And similar to the CEO of Binance, the CEO of Kraken also left a message. Layoffs happened due to lots of hiring without enough emphasis on culture and mission fit, and at a time when crypto was super hot.
As for the world of NFTs, the network's largest non-fungible token sale platform launches a new protocol. None other than OpenSea has already begun its migration process to Seaport. This Web3 protocol is loaded with new features and will enable significant advances within the platform.
One of the most important being the reduction in gas fees, as they will close to 35% lower as long as Seaport is used. With last year's data in hand, this would have resulted in savings of up to $460 million. In addition, another advantage is the elimination of the one-time installation fee for new users, which adds an additional $120 million in average savings.
Meta lands in Hong Kong to boost the metaverse. To do so, it will collaborate with local entities alongside establishments and institutions in Hong Kong, where there are 7.4 million residents. The idea is to test what everyday situations will be like in the metaverse, and to do so, Meta plans to incorporate virtual reality technology in bars and offer augmented reality training for students and teachers in schools. It is also planned to work with Hong Kong creators to share non-fungible token projects on Instagram.
Now, the company TBD, owned by the well-known Jack Dorsey, announces that it is developing Web 5, which it defines as a more decentralized web platform. The purpose is that users are the sole owners of the information and they have full control over the data. TBD is developing a new type of decentralized applications and protocols to achieve this goal. Specifically, the decentralized web nodes will allow users to encrypt the sending and storage of messages or data.
Our last news story for today is a little left down to earth, as it were, as one of the best known airlines in the world will begin to accept digital currencies. We are of course talking about Vueling. The low-cost company announced that it's partnering with the payment provider BitPay and it will implement the Universal Air Travel Plan technology, a global payment network for airlines. This makes Vueling the first airline in Europe to allow this payment method. Users will be able to pay for their flights with over 100 different wallets and 13 different cryptocurrencies.
And now let's move on to analyse the cryptocurrencies that have experienced the most movement in the past week. In the top gainers, we can see that Celsius Network ranks first place. Despite the problems that the platform has had, a new recovery plan seems to have led its token to decouple its movement from Bitcoin and skyrocket. Celsius is followed by Storage and Synthetics.
In the DeFi ranking, we find DAI, Avalanche and Chainlink at the top, riding the wave of the upward movement after weeks of falling in value.
As for the realm of non-fungible tokens, we can see changes in the top position. Mana, the Decentraland token, returns to first place in terms of market cap, sending Flow to second place, and in third position we've got Bored Ape token, ApeCoin.
As for the weekly top losers, we find Nexo in first place, having been affected by rumours associating it with the 3 Arrows Capital investment fund, which, as explained, is facing a possible margin call for its loans in AAVE and Compound. It is followed by the exchange token KuCoin and Gala.
With regards to total value locked, the positions above remain the same, leading to weekly losses but a lower percentage than last week. We can even find Kronos in 8th place with a positive weekly balance.
That's all for this week. Make sure to check back in next week for more crypto news surrounding the crypto and blockchain world.